Okay guys, so following on from the last technical analysis video that we've done here on Cardano's ADA, we have seen this expected push to the upside. Currently up 10.47% from our low on Tuesday at 1300 hours. So just flashback quickly here to the last technical analysis video. We were talking about the potential for a move down towards 63.28 to 65.04 and how we had to hold above 63.49. Okay, we were looking for market entry at the point of the actual recording. That was at 65.95, which you can see is illustrated by this gray line through the chart here. We dipped down into this lower, slightly lower expected range, and then we've bounced up, finding resistance on the 200 exponential moving average, getting a quick retracement yesterday with a little bit of volatility before launching all the way back up here. Now, with all of that, we can of course see that this is at the moment under the typical three-wave pattern. This actually means that if we're super cautious, we actually probably want to be taking profits right around now. Okay, let me go ahead and draw this back on here. So as you can kind of see, our move to the upside based on this rejection from our 200 exponential moving average, the retracement to 65.5, and this most recent push to the upside, the target that we would have as a kind of day trader would have been between 70.25 and 71.42. That means that this is exactly where we want to be thinking about, if we're risk adverse, locking in some profits. Or at the very least, thinking about moving our kind of stop loss up towards the 200 exponential moving average, making sure that if this does reverse on us, which has a high probability of doing, that we don't, just see all of those gains vanish, right? So we either lock them in, move the stop loss to 200 EMA, lock in some profit if that gets stopped out. But this is a great place to be, right? Great profit so far. With a little bit of leverage, this would have been beautiful, right? So obviously coming up to this 1 to 1.236, that's 70.25 cents to 71.42 cents. If we breach, what happens? So what happens if we go higher than 1.236? Well, our main key target that we want is 73.36. Okay, the 1.618. If we can hit 1.618, it kind of takes us out of this kind of worrying kind of zone that we're in at the minute and actually morphs us into a 5-wave pattern to the upside, which is kind of exactly what a lot of people will be looking for. So at the moment, we kind of sit neatly inside your A, B, and C structure like this. Okay, but if we were to pierce higher than 1.236, it's no longer technically an ABC. We would be looking more at the idea of maybe it's a W, X, and Y, and that has the ability to then turn into something that would be a W, X, Y, X, and Z, okay, specifically if we go above kind of 1.236. But the internal workings, they aren't giving me kind of double, triple zigzag vibes. Instead, I'm looking at this thinking to myself, is there the possibility that we had an expanding diagonal correction and now we're looking for this big expansion, which is a wave 1, wave 2, up here at 73.36 would be our wave 3, down for 4 and up into 5, and takes us out towards our targeted range, which, by the way, guys, sits between 77.06 and 81.25. Now, for that to happen, there's going to be a lot of retracements in that journey. Okay, I'm going to go ahead and remove the fibs off the chart there. So as we think about this, it's possible that this is just the wave 1 of our wave 3, indicating that we have a wave 1, we'll have a retracement, big wave 3, 4, and 5, and all of that actually just marks our wave 3. So you have 1, 2, 3, 4, and then 5, and we finish off at around 80 odd cents. Okay, now Bitcoin's in a pretty good spot, so I think this is a true possibility, but as I said, where we are right now could well be an area of resistance before we get those next breakouts and could be a great area for locking in some profits if we're still in this long position. Let's go ahead and take a look at some indicators then. We're overbought on the hourly chart and the 4-hourly chart, indicating that we are likely to see a retracement. It's possible, in fact, that we come down towards the 200 exponential moving average and turn previous resistance into support. So this kind of gives the idea that we're right inside that sweet spot for, taking profit. That's kind of what it's looking like to me. Let's go ahead and turn that off, bring in the relative strength index. The relative strength index is overbought as well. It's cooked up quite a bit. Can see a bit of a retracement from here, but it can stay up here equally for quite some time as well if momentum continues building. MACD histogram. Well, the MACD histogram has currently got some bearish divergence. So basically what you've got is you've got higher highs on your price, but you haven't yet got higher highs on your histogram. Now, it's not the most obvious. In fact, it's very, very subtle, just like that. And obviously, normally when you want bearish divergence, you want it to be more pronounced. You want it to see something like this, where it's quite clearly higher high on price, but lower high on your histogram. Now, this being as the way that it is an indication that, okay, yeah, there's the possibility here for divergence, but it's not so clear that actually you kind of bank on it. So I wouldn't be paying terribly too much attention to that. The accumulation has been happening here, as you would kind of expect, and volumes, of course, have grown up quite a bit here. So we have, okay, so higher highs on volume as we have higher highs on price. So that's a good sign as well. So as I think about this, I would say, yeah, we're looking for a brief correction. It can, of course, be a precursor to a bigger run to the upside. So we're not terribly too concerned. Like I said, we would probably be looking to move the stop loss up into profit at this point. But be aware that it's possible for a wave 2 to retrace 88.2% of this entire move to the upside. And so if I do expect a retracement of that kind of size, we'll be looking really at quite a broad range for retracement. This becomes a little bit of a problem. So it might even be that what you do is you actually put the stop loss just lower than the previous swing low at 65.5, limits any potential downside. And if you do lose that, you lose the structure anyway. So for the retracement of a wave 2, we would be looking between 66.13 and 67.55, but we can't rule out double bottom situations either. So, you know, for me, I would probably look at this as a risk adverse way. I'd put that stop loss, you know, somewhere down here nice and tight at this point, around 65.43 hypothetically, and of course still looking to target out 77 on the high side for the take profit, but that can of course expand up. We might even have to have this staggered out into kind of TP1s, TP2s, TP3s, and that's take profit 1 through 3, just simply because I think this has the potential to overextend a little bit further if we do get those impulsive markings. But I'm not expecting us to be looking at this through those kind of really large impulsive movements, but very possible that nonetheless that we kind of get them. The wave 4 here is kind of irregular in the way that it's kind of structured out anyway, so we'll be really cautious about it. But for now, it's all looking quite positive on the 1 hour time frame, right? Potential for retracement and then a good shot to the upside, taking out that 1.618 from earlier. Okay, let's roll this up into a daily time frame. Because on the daily time frame, we found resistance on the, guess what, 200 exponential moving average. You can see it right here, pretty much just on the nose. Now, the 200 daily EMA has been a major resistance for Cardano ADA's price action. As you can see, we were dancing around this from April 24th. And well, in the last few videos, we were talking about just how this wasn't looking strong. And if we couldn't get a closed position here, we're going to see resistance and basically get hammered down. That's exactly what happened with our move down towards 63.28 to 65.04. And well, we've bounced all the way back up into the kind of targeted range between 70.25 and 71.43 as we illustrated on the hourly chart, which happened to coincide very nicely with a 200 EMA on the daily chart at 70.98 cents, which our high currently comes in at 70.99. So for today's candle, it's looking very interesting. At the point of recording, this is 5:19 UTC. So just for reference, it's approximately 3 or so hours before it actually hits on YouTube. So you guys have seen a little bit of what it was like about 3 hours ago. But as you can kind of see, what we're looking for here on the daily time frame is a breakout above that 200 EMA, and it needs to be a strong close position, right? We had a close position on the 24th, but it was immediately met by a bearish candle and then a second bearish candle closing below. And that pretty much gave the bears the control of the market. Okay, so what we're looking for is a close above, a retest of the 200 EMA, and preferably close bullishly, and then follow that up with another kind of fantastic surge. So at the moment, you can see that they've had plenty of these fake out situations: close above, then down, close above, then down, close above, then down, above, then down. Right? We haven't broken that yet. So we're looking for a close above, and then we're looking for an additional close above the 200 EMA in a more bullish way. Okay. and that's going to give the bulls more confidence to then start thinking about these higher moves. So as it sits right now, it's very interesting. We obviously are in a bullish pattern overall. A lot of people will call this kind of like a bullish flag. It's entirely up to you how you want to look at it. Basically, we have the pole with high volume. We have then the flag, which is tilting down, which is low volume. Okay, if we bring up our stochastic RSI here, you can see plenty of momentum bouncing back to the upside, and it's looking very strong, right? To expect some volatility on the smaller time frames, but to me, it looks like the chart is gearing up for a breakout of the 200 EMA. Now, if we take a look at the relative strength index while we're here, we can see that we're above the 50 level, plenty of room for growth. The longer term trend is looking good. The volume profile, as I was indicating, right, we have great volume, okay, and then decreasing volume during this kind of bull flag. Now there are a couple of spikes of positive volume in here, okay, specifically as we came down low and as we kind of surged back up and broke out of this channel, but they were kind of fake out exceptions. And then of course volume drops all the way back down as we continue to go down here. So as we slide through this channel, volumes for the most part, minus those two anomalies, they're actually decreasing, right? And so what we have is volume that's spiked up for the pole, decrease in volume for the flag, and the next breakout is going to be pretty significant. Okay, so I know there's so many impatient retail investors who aren't really looking at the market through positive lens. They're looking at looking at the market through the kind of emotional lens, right? Frustration, and that usually this happens because they're overexposed. And when I look at the market here, I'm looking at it not through an emotional lens, but from a purely kind of technical standpoint. And actually, it's looking very positive. It's not giving me the kind of bearish vibes that we need to. There are, of course, a few bearish situations that could unfold because we can't be, burying our heads in the sand completely. It's very possible that this B wave hasn't even finished, right? And we're going to be talking about going down to something crazy like 5 cents for Cardano, right? I don't think it's going to happen. I think it's a low possibility, but a possibility nonetheless that I do have to kind of keep in the back of my mind. But ultimately, the structure to the upside is actually tracking more of what I believe to be a diagonal pattern for the C wave structure, indicating that we are likely to see a good, strong push to the upside, where, we look for $3 to $5, or even the potential between $5 and $13, right? These are true potential possibilities for a significant break to the upside. If we are to track the kind of contracting diagonal, it's going to be on the lower side. If we're to track the expanding diagonal, it's going to be on the higher side. And a ending diagonal would also be on the higher side, right? And it's also possible that we have some kind of nested impulsive run, which basically means that the buyers and the sellers, who are, of course, represented as candlesticks on the chart, they're acting irrationally through emotional kind of lenses. And what you end up with, if you track these patterns internally, is what we call impulsive, meaning that the behaviors are impulsive, and that is leading us out to significant heights. Okay, if we do have those nested impulsive behaviors and actually nesting in nicely, well, we could be looking at complete and utter moonshots that would break most crypto mines at around $38. Now, obviously, a lot of people in the comments are going to say, oh, what about the market cap? And well, I'm just going to bounce back and say, well, what is market cap? Think about what it actually means, what it actually calculates, and think about what it actually represents, because it does not represent liquidity. It does not represent the amount of inflows. It only represents macro level pricing. So, drum roll, what does it actually represent? It represents price, right? Which means price dictates the market cap. The market cap cannot dictate the price, because the market cap doesn't represent any inflows. It does not represent any liquidity. It's just macro level pricing. Okay, it's very misleading if you don't understand what the calculation is actually representing to you. Track the liquidity, track the inflows, right? In most cases, you'll find that a reasonable amount of inflows can actually reflect market cap by up to 600 times more. So, for example, if you had $1 billion of inflows, you could actually theoretically experience a $600 billion market cap, right? It sounds crazy, but that's the math, right? It's all about supply and demand and the scarcity of the actual tokens. For example, you can't liquidate Bitcoin for $2 trillion by a snap of your fingers. It just doesn't happen. The second that there's a little bit of sell pressure, the price drops down, the market cap reflects that drop, and it's just not realistic. realistic. So understanding that $38 is technically a possibility without getting tripped up on market cap is quite critical, because if you don't understand why market cap is or what market cap is actually representing to you, you're going to potentially do yourself a disservice, right? A lot of people in the very early days of Bitcoin said you couldn't see a $300 billion BTC, let alone $1 trillion, right? You wouldn't see $10,000 Bitcoin, $100,000 Bitcoin. Yet here we are with those very scenarios unfolding, and it doesn't take $2 trillion of inflows either, right? Very important to understand the differences, and it's much more important to follow what moves the price, which ultimately is going to be your supply and your demand imbalances, right? If you have more demand than supply, price goes up. And if you have more supply than demand, price goes down. It's very, very basic. And it's probably too basic that a lot of people don't believe in it, but it simply is what it is, right? If you understand the economy and the economics kind of 101, then you end up with these real basic understandings of what's going to drive this price higher. Now, at the moment, Cardano's fundamentals are even stronger than they were back here in 2021. So for us, we need to be thinking about, okay, well, if we got to $3.10 back in 2021 with smart contracts, only just kind of being released, and here we are now with, a lot of decentralized applications on chain soaking up supply, along with DeFi kind of booming with TVL that's just going to expand over time. It's really hard to think that the price action isn't going to, significantly go higher, even though we have an increase in the supply because, of course, there are staking rewards, etc., right? So supply is slightly higher than it was back in 2021. Okay, obviously. And then, of course, you have increased utility, increased fundamentals, on-chain governance, DeFi, smart contracts, yada, 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 all soaking up the supply. So although we had an additional supply get minted, or I say minted, but like distributed during the last few years, that actually gets soaked up by the extra utility that's going in there and some. So as the ecosystem continues to develop and continues to mature, the supply gets shorter and shorter and shorter, whilst demand, it goes up and up and up. Basically indicating to us a significant surge to the upside, right? Price doesn't just move randomly, right? And there is no kind of magical internet money, right? Essentially, all we are doing is transferring value from point A to point B, or from person A to person B, right? Money isn't created out of thin air, right? Liquidity in, liquidity out, and fees are sucked up along the way, right? So understanding that, your price going up is only really a reflection of increased demand while supply is decreasing, right? And that people are buying at higher prices because they believe the price is going to go even higher later. And people who are selling, well, they're selling it to those people who believe the price is going higher because they believe the price is not likely to go higher, or they're in a pinch and need the liquidity themselves, so they need to sell, right? And so understanding the kind of psychology, which is what Elliott Wave tries to do for us, understanding the supply and demand metrics and understanding the fundamentals of a project, right, are all critically important. You can't just take a look at the price chart, draw in a fancy line and say, look, we've got higher lows and we've got higher highs. We're super bullish. The magical internet money is going to continue printing, right? That's very unrealistic, right? But what you do have to do is you have to take a look at the market, think about the people who are buying, who the people are who are selling, what's driving the supply-demand imbalances, what's going to push us even higher without the kind of supply-demand imbalances, but what else is driving that from a fundamental standpoint, and do we think these targets are realistic? Because at the moment, it looks to me like the behavior of everybody here is pointing to these targets up here. Okay, so if this behavior is to repeat itself continuously through the course of the year, maybe even into 2026, then yeah, I think we have a good strong shot at moving out into that slightly higher range. Okay, so I guess I've kind of spoken a lot more in today's video than I would normally talk about from a technical standpoint, but hopefully it has been helpful. If it has, smash that like button, subscribe if you're new, join us in the Discord, and I'll catch you all in the next one.